Hi, Josh Brettel here with another look back at what the heck just happened. And last week, the Fed cut rates again as we were anticipating, but then they kind of started pumping the brakes as to looking forward to future rate cuts. So let's take a little bit deeper dive into what happened. Last Wednesday, the Fed Reserve cut rates and the markets soared. Dow, S&P all hit record highs. And then Jerome Powell came up and started talking again. And he described the fact that there was some dissent inside of the committee in regards to future rate cuts. One of the governors talked about a 50 basis point rate cut as opposed to a 25, and one said don't cut rates at all in December. So there's some lack of clarity. A lot of that lack of clarity right now is coming from the lack of government statistics coming out. This government shutdown has impacted the statistics that our Federal Reserve relies on quite a bit for a lot of their reporting. Now, there is still statistics coming out from the private sector. One of the biggest ones we look at is the unemployment numbers. And yes, the federal government reports those numbers, but as does the big payroll provider ADP, and their reports, as well as the government's historical ones, do show decreasing employment numbers, which means we are starting to see a lack of employment. And the Federal Reserve not cutting rates, the lack of employment, this does put some clouds in the sky that we're a little bit worried about, but it also is a bigger testament to why long-term planning is so important, because this could bring short-term volatility, and those are things that we never want to have impact you in your retirement. So as we go into the end of the year right now, we don't see an end in sight for the government shutdown, which could lead to increased volatility, especially with the Fed kind of pumping the brakes a little bit on these rate cuts. So if you'd like to talk more about that, we would love to talk to you, but if not, I will see you next week.